Now, gold prices keep marching higher thanks in huge part to the slumping U.S. dollar. So that being the case, is gold headed even higher now? Joining us now to help answer that question is Suki Cooper, precious metals analyst at Barclays Capital in London. Thank you for joining us. Good morning. And let's start with the fact that gold is finding support as the hedge to a falling dollar, as well as a safe haven. So even when the dollar rises because of the Dubai debt situation, gold finds a bid. What could halt that rally?
At the moment, it seems gold's very much on an uptrend, and there's very little to halt that rally. We've seen last week when we saw the concerns out of Dubai, we saw quite a lot of profit taking from gold. We saw prices dipping below $11.30 an ounce, but prices bounced back quite quickly, and we saw prices gaining $30 before the morning was out here in London. So although prices did encounter some profit taking last week, they've bounced back, and as you mentioned, they've hit new highs this morning as well. But it's the fact that the sentiment towards gold now is very, very positive, and as you mentioned, it's not just the weaker dollar. It is investors seeking a safer haven for their assets as well. So gold is continuing to its uptrend at the moment.
Suki, talk about the short speculative positions in gold versus longer dated positions.
Sure, we've seen investors increasing their exposure to gold across all modes of investments, whether it's coins, whether it's bars, or whether it's physically backed ETFs. But the futures positions last week actually hit a fresh all-time highs. They've exceeded 800 tons in terms of speculative interest now. But what's been interesting is that it's not just gross long positions hitting highs. We've actually seen the short positions falling. So over the past few weeks, we saw more short positions being established. But over the past week, we saw short positions being covered at the fastest pace in over a year, and they haven't been covered at this pace since last September, when we saw prices actually gaining $85 in a single day. So we've actually seen short positions declining and long positions becoming even longer.
Interesting. Now, how about demand from central banks around the world helping to support gold prices? Is this real demand or perceived demand?
I think in combination with the investor demand, central banks are the second biggest factor to support prices at the moment. And it's the slower sales we're seeing in the central bank agreement, but it's also the buying that we're seeing outside of the central bank agreement that's merging. So some of the quantities are not large quantities. We've seen Central Bank of Mauritius buying 2 tons of gold from the IMF, but it's the fact that we're seeing this change in appetite. They're not selling as much gold as they could, and we've seen some buying emerging outside of the agreement as well, which is just adding to the positive sentiment.
Thank you so much for your thoughts. I've been speaking with Suki Cooper, an analyst at Barclays Capital in London.